Hello and welcome. You are listening to the Investor Lab, the auditory epicenter for passionate people seeking a life of freedom, choice, and abundance. And if that is you, if you are seeking a life of freedom, choice, and abundance, well, then today's episode is in the sweet spot for you. So I had on the show Jason De Silva, who's our head of client success, and we talked about a absolutely new tool that is like completely changing the game for property investors all across Australia, and it is called a property portfolio growth plan. So we talked about, Jason's like leading up the team that is doing all of that kind of stuff. So we really dig into it. We talk about, what is it? How does it work? What are some of the success stories? Who is it for? And why this is something that is really, I think, critical for any investor at any stage of the journey. We talked about, some success stories, some people that had to get their reframing. And we talked about like the different levers and how time affects the portfolio. So if you're interested in understanding how to build a portfolio that will help you that will actually achieve your dreams, your goals, and everything that you want in life, then this is an episode for you. It's super informative and super interesting. And if you listen to this episode and you're like, oh my God, I want a property portfolio growth plan, this is, let me add it. We'll put a link in the show notes so you can book in directly with one of our portfolio plan advisors, have a chat with them, see if it is right for you. And if it is, we can help you to move forward and create a plan there. Or if you're not ready to just click a link and book in a call with someone, and I'm an introvert, I understand that. You might be like, can I just go and suss things out a little bit more? You can head to our website, head to dashdot.com.au, check out the What We Do page. You can see all of the stuff we do there, and I can't wait to help you too. But without any further ado, let's get stuck right into it, and I'll see you on the inside. Hey guys, welcome back to the Investor Lab. Joining me on today's show is Jason De Silva. Jason, you've been on the show before, but a hell of a lot has changed since then. You are now the head of client success at Dashdot, the big head. How have things been since
the big dog?
The big dog making clients happy left, right, and center. Mate, tell me what's been happening. Last time you came on the show, we talked about your investor journey personally. We talked about, what that's looked like for you as a millennial investor, getting ahead and all of that kind of stuff. What's happened since then? Give us a bit of background.
Yeah, there's quite a bit that's happened since then. So since I bought those last two properties, I did buy another property, which is really exciting, and a different strategy there as well. I've also been growing out the team, so we've grown out our team quite significantly since then. We've started a few different business units. So we've started a portfolio planning business unit as part of the client success team, which is really exciting. We're also doing quite a few exciting things in the property space as well. So yeah, it's definitely been a bit of a change since we last spoke.
Awesome. Very much so. Yeah, there's definitely been a lot going on there. And I think it's really cool. Like in the, I guess our approach, the hours in like me, you, and obviously the rest of the team, the approach in this kind of like, call it turbulent environment, interest rates are going up, is really going, okay, well, how do we better serve people? Like, how do we find more ways to solve the genuine and real problems that property investors face at every step of the journey? And a lot of that, because that is all around client success. And we look at clients as being obviously not just current clients, but also people who are, everyone's a client basically, right? So to us. Yep. So it's like looking at how do we solve all of those steps. There's quite a lot has kind of fallen in your camp, which has been pretty cool. What we want to talk about today, though, is the portfolio growth plans, which is a brilliant new addition, something that we've been cooking up for like the last couple of years. And anyone who's listened to the last couple of episodes of the podcast will have heard me talk about it in the intro, because I've been telling people it's coming. And what we want to do in this episode is take a little bit of a deep dive into it, talk about like what is a portfolio growth plan. Who is it for? Why? We're just let's dig into it, and we'll talk about some success stories and all of that kind of stuff. But before we get started, this is as getting started. Why? What is a portfolio growth plan?
So a portfolio growth plan is a strategic plan that we work with clients to build. And the idea behind that is that we take into account all the clients' goals, their hopes, dreams, desires, and essentially put that on paper and build a roadmap for them to follow in order to achieve their goals. Because what we've found is a lot of clients come on board with a big goal that they want to achieve, but they haven't really put much thought into how they would achieve it and kind of breaking that goal down into, I think you talk about it, I've talked about it previously in some other podcasts as well. We're breaking it down into years and months and days. So we kind of do that for the clients and build a plan that they can follow. We can help them build together in order to get them to that goal. So, yeah.
Yeah, that's pretty good. And the interesting thing about that is because like that can sound like, if I was to take that on face value, that
Mm.
might sound like something that you could almost sketch out on a piece of paper. Like, oh, okay, cool. So you want to do this. Okay, so you've got this big goal. Now let's just like draw a little thing here, and then let's
Mm.
break it down into some steps. And anyone who's done any kind of like goal planning and stuff, or anyone who's listened to any of our episodes to talk about like how to do that, it is quite a we'll call it an unscientific process. It's like, I want X by X. What steps do I need to take by doing it? And it's quite pragmatic, but it's relatively unscientific. There's like still gaps in there of like, how is this done? The thing about the portfolio growth plan is that it is quite scientific. We originally obviously started building this like 2 years ago. Gabby and I built this in
Mm.
this crazy complex spreadsheet, which was actually too complex for us to be able to roll out to clients. So now we've turned it into a pretty sophisticated piece of software, which actually maps the specifics of like how that is going to happen. And so, to kind of just expand on that, and I'd love you to kind of talk about it because you're actually a lot closer to this tool these
Mm.
days than I am. But one of the things that I personally really love about it, it's very easy for someone to say, "Oh, you want to get to $100,000 in 10 years or whatever, that's cool. Just buy a property every 2 years," or like
Yeah.
something like super simplistic like that.
Yep. Yep.
Or like a single page spreadsheet, which just assumes like, if you have $2,000 cash flow per property, and just kind of like do really
Mm.
simple basic maths. One of the things that I really love about the tool is that it specifically, and like with a stupidly high level of mathematical accuracy, actually factors in like, okay, if I take equity out of property one to fund property three, what does that actually do for my cash flow for the
Yep.
portfolio and for that property? And what happens if I add savings here? And then what happens if I allow a little bit of time? And what happens if I actually adjust the interest rate a little bit? And what happens if I do all of that? And so it's every single property is specifically and interlinked. And then you can actually map out what actually happens if you use equity, if you use savings, if you use all these different things to hit your goals. And so it is the most realistic thing that I have ever. So I've never seen anything else on it like this on the market that can realistically tell you, okay, if I start here and I do these set of things, I will end there based on all of these assumptions. Have you got any other kind of color that you want to add to that? Because I'm a bit of a nerd,
That's a
so
really good point.
I particularly like the nerdiness of it. So, but what do you think?
Yeah, it's a very complex model, and we've tried to build it to suit as many client scenarios as possible and to make it as personalized as possible to the point where we can include a savings rate, so that will continuously compound over the purchasing cycle and over the model as well. And also we can predict using the model when the client will be in a position to purchase their next property using cash and equity as well. So it's not just about telling the client you'll be able to buy a property in 2 years or whatever. We can tell them like almost to the month when they'll be able to be in a position to be able to use the cash and equity, or a combination of both. Or if they only want to use cash, we can tell them when they would have the cash ready to be able to execute on all those purchases as well. So we can go into quite a lot of detail to make sure we're delivering the right outcome.
Yeah, I think it's pretty interesting, right? Because one of the biggest problems, and again, I'd love your insight on this as well, because again, you're now the head of client success, but you've personally, managed the journey of so many of our clients and are now still very closely related. One of the biggest challenges that I think most investors face is a lack of clarity. They, and this is is a really interesting thing. Let me riff on this for a little minute because I think it's something that people don't talk about, right? So people might so generally speaking, most people want to create a life of freedom, choice, and abundance, whatever that means to them. The ability to do what they want, when they want, with who they want. Now, if they get to a point where they decide that property investing is going to be the vehicle to get them there, that is great. So then they go, okay, cool. I'm going to invest in real estate. That activity is going to get me to this place where I can do what I want, when I want, with who I want. Now, we are, I would say, the best in the country at finding the right property in the right place at the right time, getting maximal returns, doing all of that kind of stuff. But even if you fully believe that you have bought the best possible property in the entire country based on your set of circumstances, you might still actually have no idea if that property is actually going to help you hit your goals.
Yeah.
And this is something that people don't talk about, right? There's a lot of focus on like, how do I find the right hotspot? Or what is a good property versus a bad property? Or should I choose to do this kind of a property strategy, or should I choose to do that kind of property strategy? But nobody's actually talking about the fact that even if you do whatever, any of those things, get the right property in the right place at the right time, you still don't know if that is going to get you to your goals. And so there's a thing that most people don't talk about, and that is that there is an underlying anxiety in every single investor, a little noise that is buzzing in their brain and probably in their chest. I know this because I have felt this, where they're going, I literally still don't even know if I'm on the right path. I'm making these decisions, and it's like this little noise of like, man, I just hope that if I keep doing this, I'm gonna get there. I just hope. And so what I love about this is it just takes all that away. You can just go, okay, cool. Okay, so this is like a recipe book, right? If I do A plus B plus C plus D plus, I'll get to the thing. It's like all of a sudden that layer of anxiety is gone. I think this is like the biggest possible gift. That's such a good point. Yeah, I think it's the biggest possible gift you can give to any investor. Great, awesome. Let's get great properties that crush it, right? But what happens if you could have a plan that would tell you how to get to your goals, regardless of pretty much whatever you've got? Even if you've already got dud properties, it's like, okay, what do we need to do now? So personally, I think this is, and I think that because this is a little tricky thing that most people don't even realize, they have that like that buzzing anxiety under. If you can take that away, that creates so much freedom in their life right now, today. But I love that about this. What do you think what do you think about that? And do you have any other thoughts around how this is changing the way people approach their journey?
100%. That's such a good point. We've had so many clients now that have built such strong portfolios, but they're in a sense of uncertainty because they're unsure whether they have purchased the right amount of properties to get to their goal, whether they need to purchase another 2 or 3 or 4 or 5. So they're just in a bit or none. Yeah. So it's really going to be helpful to provide clarity to clients so they know where they currently sit and what they need to do in order to achieve their goals. And that could be nothing as well. We've had quite a few clients that we've built plans for where they've done everything. They've built the base, they've built the portfolio that's going to provide the income that they need. All they need to do now is just sit back and relax and let the portfolio compound in the background. So there's been a lot of peace, as you've said, with some of the clients that we've been creating plans for.
And that is such an interesting thing to think about, right? Because even with some clients who have like already, let's say they bought 4, 5, 6, 7 properties or whatever the case may be, and they might be, they might have been working with us for a few years. They built a property portfolio. Some of the, we've had some of them on the show, and they've built these portfolios. And even those guys are going, do I still need to buy more? How many more do I need? And like, and then all of a sudden you do a plan, and it's like, well, you actually don't need to do anything. You can stop. You can stop right now, and you will hit your goal. And that is a game changer. Like that is a game changer because if you imagine if you had no idea, like let's say you own 5 properties, right? Let's just use that as a benchmark just for the example. Let's say you got 5 properties and your goal is to, I don't know, have $100,000 reliable passive income, and you have literally no idea, do you need to buy 5 more or 10 more or 1 more or anything? And so you're at this point where you're going, okay, cool. So I've still got a mountain to climb, but I have no idea where the top of the mountain is.
Yeah.
But then imagine if you got a plan that said, oh, hey, you're there. If that is your goal, and if that is the timeline that you want to achieve the goal, then as of today, you can do nothing and you will hit that goal in that timeline. Obviously not at that day, but obviously let's say it's 5 or 10 years in the future. Whatever. That changes the game because what we're talking about here, like with property investing, property investing is not who can buy the most houses. Property investing is not who can like have the biggest numbers. It's not about any of those ego metrics. Yeah. It's about how do you live the best life? How do you live a life of freedom, choice, and abundance? And if you knew that you'd already done the things that you needed to do, then that would change the way you live your life today. That you would then turn around and go, oh, so I don't need to save every single dollar that I earn in order to continue to invest in property. I could actually go on a holiday around Europe for a few months. And all of a sudden that delayed, that kind of like, one day in the future, I'll do the things that I love. You get to actually start doing the things you love today because you've already done the work you need to do to get to where you need to get to by the time. And so all of a sudden, the dynamic of the life today changes. So I
Yep.
think, I think people really underestimate the importance of having a plan, but then also, even if people do have a plan, it's usually so unscientific that it's kind of effectively hearsay and conjecture. It gives a bit of clarity, but doesn't
Correct.
actually give any purpose. So, like, who's best suited for this then? Is this really for people who've already got a portfolio, or is this for people who are just thinking about it? Like, who's suited for a portfolio growth plan?
I would say everyone would be suited for a portfolio growth plan, and we've actually created plans for quite a few different types of investors. So we've built plans for clients that have no properties and they're just starting out, and it's really helpful for those clients because they get to skip all of the mistakes. They can have a plan that's good to go, that's built in line with their situation, that has the recipe that they need to follow in order to move forward, so they can get started on the right foot. Because we all know the importance of property number one and building that initial base, so they get to avoid all those mistakes, I guess you could call it. And we've also built plans for more experienced investors as well that already have properties in their portfolio. I think the most that we've done is 14. So we built a plan for an investor that had 14 properties. And the benefit for those investors is they can see how their portfolio currently sits and what it's going to look like in the future, and what needs to be, and what are the gaps that they need to fill in order to move them closer to their goals. So I would say almost every investor should consider getting a portfolio plan.
Yeah, it's interesting. And you say every investor, and a lot of people forget that the biggest cohort of investors have zero properties.
Yeah.
like that is the biggest cohort of investors. We always talk about it too. It's like, 71% of property investors get stuck at one property and 90% get stuck at two. It's like, hang on a second, but most investors get stuck at zero, right? Because
Yep.
they're psychologically, they're like, right, I want to do this, but they've got analysis paralysis, anxiety. What if I get it wrong? Am I going to choose the right thing? And so being able to crack through that and go, now I can see what I need to do. That actually takes more people from 0 to 1. And if we can help people get from 0 to 1, we can help them get from 1 to 2, then 2 to 3, and so on and so forth. So I think
Correct.
it's a total game changer. Obviously, our mission is to transform the way the world invests. We want to help as many people to build wealth and create a prosperous society. That's our goal. I think this is such a game changer for that. One thing that I was going to mention was that I also think it's really interesting for people who have got a how do I phrase this the right way? They bought some duds, right? And so sometimes selling a property is, maybe it's not on the table. Maybe somebody's got a property and maybe it's not a dud, but maybe they've got a couple of negatively geared properties. Let's just use that as an example.
Yeah.
Let's say they've got a principal place of residence and they've got 2 negatively geared properties, and they're like, well, I want $100,000 passive income in 10 years. That's cool, because then you can actually go, well, this is what we would need to do. If you want to keep all of those properties, then this is what we would need to do to get to that destination as well. Have you seen any examples of that kind of a thing?
I've actually just seen that in my own portfolio. So I built a portfolio plan for myself, and as we've spoken about on the last podcast that we did together, that first property was a negatively geared off the plan apartment. So by building a plan for myself, I was able to see how my own portfolio sits and how I can continue to move forward with selling that property and also with retaining it as well. So with clients that want to see what it looks like and have a look at multiple different scenarios, we can model that and pressure test that with them. As opposed to it just being a one-sided conversation from our end, we can take into account anything that the client wants us to consider as well. So it's more of a conversation and a collaboration with the client, as opposed to us just prescribing something without working with them on it.
Yeah, that's really interesting. That is actually a really interesting point, because there are so many variables, right?
Yeah.
So many variables in life, and there's all of that, and so many different ways to carve up the cake. It's like, well, what if I have a $2,000 a month saving rate? What if we double down and we increase that to a $3,000 a month saving rate? What if our current saving rate is $5,000 a month, but we're about to have a kid and we expect that to go to zero?
Yeah.
What if in 2 years' time we plan on doing X? What if interest rates go up? What if, and so we're able to build in all of these different kind of assumptions and go, okay, cool. Let's make this completely personalized. Have you ever seen a situation where the plan actually was worse than someone's expectations and beliefs. I'm very interested in that. I'm very interested in that. Like, because some people,
Yeah.
because nobody has any clarity around even what is possible. Like, if I was, some people are like, I want to have a $60,000 passive income from my property portfolio in 20 years, which is a like super achievable goal, right?
Mm.
But some people are like, I want $1 million passive income in 3 years, and I'm not going to put any savings into it, or stuff like that. Have you
Yeah.
seen it? Have you seen any situations where someone's had goals that have been unrealistic, and then had to like go, well, actually, like here's a real plan. Like, have you seen anything like that?
Yeah, we've seen that happen quite frequently, actually. One example that comes to mind is one of our clients had a goal to achieve a passive income of $240,000 in 5 years.
Mm.
And he had a very high savings rate. So in his mind, he's like, I've got all the resources to do this, and let's have a look and see if we can make that a reality. And we actually test drove multiple different scenarios for this client. And from going through the planning process with him, we weren't able to get there in 5 years, but we were able to get there in 7 years. And by showing him that plan and showing him what properties needed to be purchased, when they would need to be purchased, it was able to bring that goal a bit more like down to earth, and being able to go through it with the client and say, we can't achieve it in 5 years, we can even achieve it in 7 years, and this is how we will do it. So we've had quite a few of those conversations with clients as part of the planning process.
And in that example, like, what? How did the client react to that? Like, because that's interesting, because it's not saying sorry you can't ever get there. It's saying no, you can get there, but just on a slightly different timeline. This is how it's done. Was that were they angry that they
No,
couldn't,
no.
or were they like, oh my god, this is cool now? I know. Like, tell me about what was that like?
Yeah, 100%. So that was a really interesting conversation, because we were able to not say that we can still achieve the goal, but it would be a longer time frame. We were able to actually show the client what would happen in that 7 year scenario, and also how the plan would look if the timeline was extended. Because once that goal was achieved in 7 years, every year after that was exponential. Like, the cash flow was just compounding so significantly after that period. And I think it was in year 10 or year 12, it had gotten to like $350,000 of cash flow in that portfolio, just by doing nothing and just accumulating those properties, and just having the compounding effect moving forward. So it
Mm.
wasn't met with any anger or frustration. It was actually clarity, because the client was like, I have this goal, and we're able to achieve a plan that's going to move the client closer to the goal. So definitely, by showing the client the actual plan and showing them the fundamentals behind what needs to happen in the recipe, was able to provide a lot of clarity in that situation.
Yeah, that's interesting. Since you started, because I know you were very excited when we created this
Mm.
tool, because you like to think about modeling and stuff quite a lot as well. What are some of the biggest, I guess, like mental shifts, aha moments, breakthroughs that you've personally had looking at all of this kind of stuff? Like, what's been the biggest shift for you that you're like, whoa, even I had no idea that portfolios could do. What any of those kind of moments for you?
The biggest shift for me was probably the waiting and time, to be honest. So looking at the compounding exponential effect of just between 10 and 15 years is such a big difference. So if a client, for example, has a goal to achieve $100,000 of passive income, and we've built a plan for them that's able to achieve that in 10 years, if they did nothing from that point forward, in 15 years, that cash flow goal would almost double. It would get to almost $200,000, just by them not purchasing any properties, letting the properties compound, and having that benefit. So the benefit of time has been a really big one. It's also been interesting to see the effects of buying higher value assets in a slower purchasing window, as opposed to buying smaller assets quicker, as well, in terms of seeing that difference in the modeling. And that's also quite helpful, because there are some clients that don't want to have 10, 15 properties in their portfolio. They might want to have 5 or 6. So we're able to show them the effects of that as well. So a lot of cool insights have come through, for sure.
That's really interesting. So, have you got any examples of like a, I guess, like a kind of a standard, like a classic kind of scenario that you could maybe share with us, of like, if someone's just starting out and they want to get from A to B? Have you got any kind of examples of what that looks like? What's an achievable goal that they can do? Because a lot of people have no idea what an achievable goal looks like.
Yeah, 100%. There's quite a few different scenarios that we can explore. Like with some of the clients that we've seen, a very common goal is to achieve $100,000 in 10 to 15 years. That seems to be a very common goal with a lot of our clients coming on board. And just from our perspective, we've built a lot of models around that goal, and the magic number of properties seems to be around that 4 to 5. 4 to 5 good quality properties purchased in a very quick purchasing window, so about a 2 to 5 year window, and then just letting the properties compound and moving forward that way. Obviously, there are some clients that might want to continue purchasing after those properties have been accumulated, but from a lot of the models that we've been creating with our clients, it seems to be 4 to 5 is that magic number, and purchasing them as quickly as possible to get that compounding benefit over the long term seems to be the recipe for success.
Mm. So when you say the compounding benefit, like one of the things that I don't think people take into consideration is the compounding of rents. Like people
Yeah.
think about the compounding of prices. You know, everyone's like, oh, compound growth, compound growth, compound growth. But it's like rents go up each year as well, and they go up versus the rent that they already were. Like
Yep.
specifically, that is specifically compounding. And the compound rate of rents has actually been increasing
Mm.
over the last little period of time, and it's only going to get worse as well. Like
Yeah.
it's only going to get worse. So, um, I think people are missing like the importance of that. So and also the
Mm.
importance of the time. Okay, so so just to kind of reiterate, if someone's like got let's say 75K cash and they're just getting started, what's a realistic outcome for them?
So I can actually share. Would it be beneficial if I shared my screen and went through
That'd be
like a
awesome.
model
Well,
for a client?
yeah. Okay, cool. So before we do that,
Yes.
if anyone's listening to this audio, there will be a link in the show notes for you to be able to go to the YouTube channel to be able to watch this as well. Because this could be a big eye opener. Because what we're going to do now is we'll actually have a look at the tool, and you get to see what it looks like. So this is going to be pretty exciting too. So yeah, Jason, absolutely, let's have a look.
So this is a case study model that we've been working on the inside. So this is for a very common scenario that we get. So I'll just go through the inputs here. So this client has $75,000 of cash available. They've got a borrowing capacity of $1 million. They're saving $2,000 per month. That seems to be a very common savings rate that we see across our clients. And their goal is to achieve $100,000 passive income and a portfolio value of $2 million in 15 years. So we've been able to build a plan for this client that gets them to that goal. It actually exceeds that goal. It goes to $111,000 with purchasing 6 properties in their portfolio.
Wow, 6 properties, and they purchase those properties over how long? Like when does they like how long does it take them to acquire those 6 properties in
So
this example?
in this example,
This is obviously just a kind of an example portfolio. This is not someone's actual portfolio. But in this example, to hit those numbers, what do they need to do? How long does it take them in terms of actually buying properties?
so the purchasing window for this client is 7 years. So they start in August 2023. They purchase the first property, and then they purchase the last property in June 2030. So 7 year purchasing window, and then they do nothing for 8 years.
Yeah, interesting.
And yeah,
So it's kind of like almost like purchase for half and then do nothing for half.
pretty much. Yeah, pretty much. Because you get a diminishing benefit once you hit that period where like the more properties you add, it actually doesn't make a significant difference in the shorter term in terms
Mm.
of getting the client to that goal. So that's something that we have realized as well, where the benefit of waiting versus adding in more properties in terms of getting to the goal quicker is actually not a big difference in the shorter term. In the longer term, it is. But once a client's built that asset base, it's waiting is definitely more beneficial than continuing to add more properties and leveraging out, because once you leverage out, you increase the debt on the properties as well.
Yeah, because it's interesting, right? Because a lot of people aren't thinking about that because number one, it depends on what point in time you're trying to measure to, right?
Yeah,
If you're trying to measure to a specific point in time, then you need to optimize for that point in time. If you're
correct.
optimizing if the timeline is different and because if you're leveraging equity, you're going to be reducing your cash flow in those properties. So at
Yep.
some point, you've got to stop digging the hole deeper and
Yep.
let the hole fill
Yes.
up a little bit,
Yes.
a little bit more. So
Yep.
just on that point, are you able to show us what the kind of cash flow on that 7 year journey based on this? Can you show us like what that looks like? Is it because a lot of people think it's linear, but what I think is really interesting is to look at this. So
Yeah, for sure. Let me just change it to a 30-year period so we can have a look at that. So you'll see here, it starts off, the portfolio is $1,200 negative, and then it's a slight negative period for another 2 years. So $4,000 negative, $3,000 negative, and then it just slowly starts compounding over that period. So you'll have a look and see here in 2037, it gets to 95,000, then 111, which is when we achieve the goal. And then it's just exponential from there. So in
Why does it have
2052,
that dip? Why does it have that dip?
which dip, sorry?
The dip at around 2044. Is that because like like the loans have changed, or what's all that about?
Yeah, it's a good question. So with this plan, it's been modeled on an interest only period for the first 5 years. So once the interest only period reverts to principal and interest, there is a slight dip there, as there's the principal payments kick in. And then it continues compounding from there because the rents have also gone up significantly in that period of time as well. So the property is still moving in a cash flow positive direction.
Yeah, that's pretty interesting. And this is one of the things again that's really cool about this is because it can actually model like what happens if my loan conditions change over time and like all of that kind of stuff, rather than just creating a simplistic kind of straight line equation. What does that look like if we look at how the equity compounds over that period of time?
Good question. So we've just got the equity growth on this tool as well. So we've got that at the bottom here. We've got three different sections. So we've got a portfolio value section, we've got a total equity section, and then an available equity. And the available equity section is set at the start with the client in terms of what is the maximum LVR they're comfortable with from a risk profile perspective. So that is also on a compounding trajectory as well. As you can see here, we start off with portfolio value of 330,000 with that first property that we've purchased, and then once we get to 2037, we get a portfolio value of 4 million, and then we get a total equity of 1.9 million and available equity of 1.1 million in the portfolio.
That's pretty cool. That's pretty cool. So you can actually kind of start to see into the this is if you just go back up to the dashboard right at the top, you can actually start to see into the distance. Okay, cool. By the time that I've set my goal, I'm going to end up with a portfolio that looks like this. I'm going to have this much debt, this much equity, and I'm going to have this much cash flow in my portfolio. That's pretty wild. That's pretty wild.
100%.
Awesome. That's really cool. Thanks so much for sharing that. Give us a little bit of optics on what that actually looks like. So what I think is really interesting about that is like those optics that I think people are missing. Now, what's probably important to talk about is like, is this a financial plan? Like, is this actually a financial plan?
Definitely not a financial plan.
And why not, right? Why not?
So the reason that it's not a financial plan is we're not licensed to give property financial advice. Sorry. So
we are licensed to give property advice.
We are licensed to give property advice. We're not licensed to give financial advice. So with all these things that we've taken into account, with the debt levels and the savings rates and the LVR, please consult a licensed professional before moving forward.
Yeah, for sure. But the other thing is not taking into consideration. So the inputs are based on like basically what you tell us, right? So
correct.
Cool, right? We'll base it on these set of assumptions, and all of the things are based on a set of assumptions. But it's not taking into consideration things like tax, because we're not licensed to that. It's not taking into consideration things like super, maybe specifically, or structures, or there's like loads of different things, and we're not obviously giving advice on whole life wealth, so no shares, no like all of these other things that are outside the remit of the things that we could. So this is specifically a property portfolio growth plan. It is very isolated to let's build you a plan around your properties based on a set of assumptions which are clearly outlined and all of that kind of stuff. But based on those assumptions, this is what you can do. But nonetheless, they're still stupidly comprehensive and very, very, very insightful. What are some of the coolest success stories or transformations that you've seen? Like, what are some of the biggest, like, holy smokes, kind of moments?
Yeah, we've had quite a few of these with going through this process for some of our existing clients. So one example is our client Peter. He had a goal to achieve $70,000 of passive income in 15 years when he first started working with us. Prior to creating his plan, he'd already purchased 5 properties with Dashdot. And when we created his plan, we found that he'd already achieved that goal and more with the portfolio that he already had. So he had a portfolio of 5 properties, and if he had done nothing from just finishing off those 5 purchases, he would have achieved a passive income of $110,000, I believe it was, which is absolutely insane. So when we reached out to him with that result, he was absolutely ecstatic. And what we've seen as well with some of our clients is when we've told them that they've achieved their goal, they want to increase the goal and continue moving forward as opposed to just stopping and going on a beach somewhere. So that's been a really interesting insight as well from some of our clients. They're quite keen to continue pushing the envelope and continue moving forward in their portfolio.
Yeah, it's interesting, isn't it? Right, because if you feel like you're winning, then you want to continue to win. It's kind of like it's that compounding benefit of success. So, like if you, let's say you start a health and fitness journey, if you don't see any results, if you don't see that your muscles are getting bigger or you're losing any weight, you're gonna actually kind of like lose interest, and you're gonna be like, this doesn't work for me, and this is kind of,
Yeah,
yeah, it's not very cool. But if you have some measurement, and the thing is here with like health and fitness, you do have measurement tools. You've got scales, you've got apps, you've got all these things. You don't really have that for property, right? So,
correct.
but if you have a measurement tool, and if you jump on the scales every day, and you're on a health and fitness a weight loss journey or whatever, and you jump on the scales every day, and you see that the actions you're taking are actually translating to the results you want, your weight is going down, you're going to be far more likely to stick with the thing that you're doing because you're like, oh my God, I'm winning. And even if you hit your goal, you're gonna be like, well, I mean, I've already got that. Wonder what else I could do. And then you start to stretch and
Yeah,
expand and start to grow into a new kind of way. So I think it's super
for
awesome.
sure.
I think it's
That's
super
a
awesome.
that's a really good point, Goose. Because the other thing that we can take into account in the plan as well is updated valuations and updated rents. So if a client has purchased a property with us, we do use some growth assumptions in our modeling. But if their property has surpassed that growth assumption, we can put those numbers into the plan, and then they can see how that changes their equity and their cash flow position as well. So we can kind of use this the portfolio growth plan as a live document that we work together with the client on after each acquisition.
That is such a good point, right? Because it's not
Mm,
about just creating a pretty picture and going, hey, here's your pretty picture. And if you just
yeah,
go do these things, it's like, okay, so in theory, what we need to do is we need to purchase, for example, a $400,000 property at a 6% yield, yada, yada, yada. But then if in practice you actually buy a $360,000 property on a 5.8% yield, actually updating that with the actual will
yeah,
change the plan.
yep,
But also, not just at the point of purchase. Let's say the growth assumption is whatever, 8%, right?
mm,
Now that property might grow by 10%. Well, that would be good. But maybe that
yeah,
property only grows by 3%. So
mm,
then, so then over time, you can continuously update the plan and actually adjust it so that you can stay on track. It's like, okay, well, maybe rents,
correct.
okay, we thought rents were going to do this, but rents actually did this. Let's tweak that. Let's update it periodically, like every 6 months or so, update the plan. Just keep on top of it, because then
Yep.
because you might start out with a plan that says something like, let's just keep it simple. You buy
Mm,
buy, buy six $400,000 properties at 6% yield, right? But
yep.
then you might get three properties in and actually go, okay, well now things have changed. Maybe you only need to buy five properties in total to achieve your goal. That'd be cool. Or in fact, maybe you need to actually buy a seventh property because maybe the assumptions that we've made or whatever aren't whatever. So you can kind of like continue to keep this as a live document, tweak, twist, adjust, and make sure that as you walk down the path, you're still making decisions that are going to make sure you hit your goal. Because if you just put a stake in the ground at the start and say, I'm going to do X and never check in on it ever again, you could end up, if you're off by 1 degree over 100 kilometers, that can end up putting you out by a
For
really, really,
sure.
really long distance. So continuously tweaking and adjusting and calibrating that compass along the way is going to make sure you get to that destination. So that's a really, really, really good point. Is there anything else that you want to share with people about the portfolio growth plan?
Yeah, I think what would be helpful would be to go through the process for the portfolio plan. So what it looks like from our end, if we have anyone that is interested in taking that up. So the first step is we have just on this as well. We have a team of 4 portfolio strategists that are working full time to create and build these plans for our clients. So as part of the planning process, we first will do a consultation with the client to spend some time getting to deeply understand their goals, their hopes, dreams, desires. What is their borrowing capacity? What is their starting point? How comfortable are they with risk? What is their savings rate that they want to contribute towards their portfolio? And there's a whole other host of questions that we ask just to get as much clarity as possible on the client situation. From there, we will build the plan in line with those questions and those assumptions, and we'll present that plan to the client. So we'll jump on a call with them, go through all the assumptions that we've taken into account, all the goals that we've taken into account, and we'll present the plan to them. If there are any changes that need to be made, if there are any revisions, any additional scenarios that we want to trial, we can implement that and represent the plan to the client as well. And then finally, we will have a live link so the client has access to that plan at any time. So if they want to review the dashboard, see what it looks like, if they ask us to make changes after a property they've purchased, we can make those changes and it will refresh on their end as well. So it's not some old hefty book that you get. It's a live document that will update as the client's situation changes as well.
Yeah, a live digital dashboard, which is so cool because it means you can carry it around effectively in your pocket. You know, you're at a barbecue, you can show people like, hey, check this out. You know, so it is pretty cool. I love the fact that it is fully digital and it's not some big, thick, printed out 100-page document, you know, that people are going to kind of like dig through. It's like it's smooth, it's clean, it's crisp, and it's digital, which is really, really awesome too. So great to go through the process. Jason, I'm excited by this, and I know that we're already seeing heaps of great results with this plan. And I just want to say thanks for coming on the show to talk about it. Great to see you again. Great to have you here. Let's leave it there for now. But guys, if you want to get your own property portfolio growth plan, we will chuck a link in the show notes for you to book in. Otherwise, you can go to dashdot.com.au. You can actually go to the What We Do section, and then you'll see all of the different stuff that we're doing. And we're adding loads of new ways to be able to serve you as an investor at every stage of the journey. So check that out. You can book in a call there. We'll have a booking call in the show notes, or you can go to the website. Jason, thanks so much. Look forward to seeing you soon.